start, let's talk about Piramal Finance. CRISIL has upgraded Piramal Finance's long-term credit rating. Jairam Sridharan, the MD and CEO of the company, joins us. We'll be discussing, obviously, the following key points. We'll speak about the rating upgrade impact on the cost of funds, AUM growth that exceeds about 25%. That's the guidance. Will that happen? Net interest margins. Will that reach 7% sooner than the street expects? Thanks a lot, sir, for joining in, and wish you, your team, your family a very happy 2026. There's been an upgrade that has come by. Obviously, that would have an impact on your cost of funds. If you could quantify that, that's point number one. And secondly, 2025 was a year of serious foreign capital inflow into the NBFC space or the banking space, ending this year with, Shriram Finance getting that big ticket from MUFG. I just wanted to understand your thoughts on this trend. Will you be open to paring some stake if a foreigner comes in? Or do you think that there would be a higher amount of intense competition because the cost of funds for peers will also come down because of them having raised these funds?
Very good morning to you. Thanks for having me, and a very happy new year to all your viewers here. Firstly, a small technical point. CRISIL has rated us AA+. Our current are from ICRA and CARE, who have rated us AA. So technically, the word upgrade is used when the same rating agency changes your rating. In this case, it's a new agency that we've brought on board, and they've rated us at AA+. So just in case my friends at CRISIL get worried about using the word upgrade.
No, they won't get worried.
All right. Now, you spoke about the impact on cost of borrowing. See, from a bond market perspective, NCD rates between AA+ and AA, the delta is about 100 basis points. The CP market, the delta is somewhere between 60 and 70 basis points. In the loan market, it is about 50 basis points. So that's kind of the delta for the various kinds of sources. So at least 50 basis points should be the expectation, going all the way up to maybe 70 odd basis points, 70 to 80 basis points one can expect, but it will happen over time as we roll over our old debt into new debt at these prices. So that's what I expect.
Our director helpfully has flashed the borrowing structure, where about NCDs account for about a little under 40% of your borrowing, and then you have all the others that come by as well. 35% comes in from loans, CPs and ECBs around 10% each, and others at 9%. So on a weighted average basis, what would the impact on your cost of funding be? Would it be this 50 to 70 basis points, or would it be on just one of those aspects?
So no, it will be across the board. It will be a little bit different, but weighted average, I would say anywhere from kind of 50 to 80 basis points we should expect to see over time, particularly as we roll over our debt. Right? The existing debt will continue as it is. We will keep rolling over as we get new debt. We will borrow at lower and lower rates. So that's kind of what I expect.
And on the second point you didn't mention, if a foreign institution is looking to write a big check, would you be open to paring some stake?
See, never say no to capital that's looking to come in. So no, certainly not. But see, as a company, we have a capital adequacy right now of 20.5%. So we are very, very high on capital adequacy. Don't really need new capital. If you look at the upper layer NBFCs, there are 7 or 8 AAAs. There are maybe 4 or 5 AA pluses now, including us, and there is 1 AA, right? So that's kind of the structure of upper layer. So we were kind of at the lower end from a rating perspective. Now we have joined the gang in terms of kind of AA plus and AAA population. So I think we'd be fairly competitive with respect to cost of borrowing. So I don't feel a lot of competitive intensity pressure requiring us to do something different. We in the equity markets trade at about 1.3, 1.4x price to book in terms of multiples. The multiples are okay, much better than where they were a year ago, but still not at a level where we would be super keen to actually do any dilution of existing shareholders. So
as of now, Mr. Sridharan, if I got you correct, there's no talks as of now, but maybe at a higher valuation, something could happen.
Correct. That's I think a good summary.
All right, but you have not got.
Sorry.
Please go ahead, sir.
Yeah, you had a question on growth and kind of growth outlook and so on. We have a full year growth outlook of 25% out in the market. We feel very good. We ended Q2 Q2 at 22%. Of course, Q3 numbers we will share in about 3 weeks. And we are well on track. I feel very confident about our ability to get to 25% plus AUM growth this year.
All right, Mr. Sridharan, then, let's focus on that point with regard to lower borrowing cost. You had indicated the NIMs are likely to reach 7%. Which quarter does that happen in? Somewhere in FY27? Could it be in the first half of FY27 that takes place?
Yeah, I think in FY27, that should happen. We are well on track, and with this action that has happened now, this certainly helps in getting us to that position, and we will be able to quickly churn some of our assets, request some of our existing lenders for a rating review, for a rate review as well. And I feel pretty good about our ability to get there in the next year.
Right. If we look at your quarter-on-quarter NIMs over the last few quarters, it has on an average seen about a 10 basis points increase sequentially. Does that mean that, by the end of this year itself, you'll be closer to 6.5 than 7, and then obviously the rate at which it is going with the reset, etc., coming in, it is pretty possible that the first or the second quarter of FY27 itself, you get to that 7% mark.
यार मेरी टारगेट का काम तुम मेरे प्रोमोटर्स को दो और तुम लोग पब्लिक में मेरी टारगेट सेटिंग कर रहे हो. I think it is possible, and hopefully we will get there, but no promises yet.
Okay. All right. Final question, sir, before we let you go. Some of your non-core businesses, there were reports that suggested that you're looking to exit it, a couple of insurance firms as well. Could you give us what is the update on that front? And by when? You have mentioned in the past you want to exit non-core businesses. By when should we be looking at that? And approximate money that could flow in?
See, we have 3 insurance businesses in which we have stakes, or
Yes.
we had stakes. One was Shriram's life insurance business. Then there is Shriram's general insurance business, in which we hold 15%. And then Pramerica Life, in which we hold 50%.
Yes.
Shriram Life, we made an announcement last week,
Yes.
last 10 days ago, that we have exited that at pretty at decent valuations, 2x ish valuations. I think we have so that part of it is done, which leaves to the general insurance business and the Pramerica Life business. We will keep looking at opportunities as they come along. There is nothing to report on those fronts yet. And we will continue our conversations in the external world and figure out when the timing is right. Right now, as I said, the company is flush with capital, so there is no need necessarily for us to do any divestments, and we are quite happy with the level of equity that we have in the firm.
What's your internal estimate of the valuation that you have on these 2 assets or these 2 investments?
See, I think deals have happened in the insurance space anywhere between 1.5 and 2x kind of EVs. When deals have happened, there are not that many deals that have happened here, but they have happened around those price points. Let's see what happens. We are not in a tearing hurry, and we are quite happy to wait for the appropriate valuations to come up.
All right, we take that point. Thank you so much, Sridharan, for joining in and giving us an outlook. Yes, we gave you some targets. Maybe you'll have a conversation with your promoter then, and thereafter, after having a conversation with your board, your shareholders, etc., come back on this show, and then we'll revisit some of those guidances that you've given us as well. But a good start to this year, and wish you a very happy 2026 as well.